Speaking of communication, we spoke about, and we actually speak about this, I think, many times throughout a modern tax season, let's say. Clients that have multiple side businesses or multiple businesses or spouses that both are self-employed, maybe maybe they both have multiple businesses, just multiple Schedule C clients. Mm-hmm. These are overall clients that need help, certainly, with taxes, right? Yeah. It'd be rare that somebody, I know in the when we would do free reviews of TurboTax or self-prepared returns, you automatically know if it's a Schedule C, it's done wrong.
Yeah, for sure.
You've never seen one that's been done correctly, right, to this point. There might be one somewhere, but something happened that was just not right.
Right.
And usually not to the client's best benefit.
Correct.
Right? So again, you're identifying from a value point of view, that's ROI. And that's why the clients will convey to us, I already did my taxes on TurboTax or Self-Prepare Tax Act or whatever it might be, right? Now I'm going to compare what the refund was or what I owed to when I go with you. That is something that's in the modern client's mind. So when you're dealing with Schedule Cs, let alone multiple Schedule Cs, that's a welcome conversation. If it's a W-2 client, you almost want to know that ahead of time because you'll probably not pass that test.
Yeah.
Maybe, right? A lot of times you still do, but with Schedule C or multiple Schedule Cs, you know,
pass.
Right? You're like, I welcome this kind of dialogue. I like the way you think. We're gonna really get along well if that's the way that you think, right? Mm-hmm. Because whatever you charge me, I'm just gonna compare it, math, right? I'm gonna have that justification in my mind of, yeah, this is smart. Let me just pay this person, mm-hmm. right? I'm happy that I'm here. Oh, and I'm also not having to do it and spend all my time doing it. Okay, this is a win, right? So multiple Schedule Cs, worked up an example of that, and this is multiple Schedule Cs also with 3 kids and being married. So being married, that's a lot of work, huh?
Oh.
Yeah. There's a lot of work, that's already a lot of work. 3 kids?
Yeah,
that's definitely a lot of work.
All under the age of 17.
All got that X in the box.
How many girls? It's are they all girls? Oh, that's even worse. If there were boys, it's easier, right?
Yeah, it looks like there's two daughters, 1 son.
Yeah.
So you're already seeing a lot going on. And then you also have only $585 in wages.
Yeah.
And then other income, $25,000. So you're thinking, and we can go to Schedule 1, you're thinking that's probably business income, right? Because how are you able to support, marriage and 3 kids, right? You need some kind of income coming in, I believe. Mm-hmm. And then you're seeing that there's multiple Schedule Cs involved. Oh, and then also substantial earned income credit. So we have one, Maxine, the wife working as a consultant, self-employed. And then Kyle, driver. Okay, so both self-employed. In general, can we talk a minute about and we talk about this multiple times per tax season, and I feel like we emphasize it more each year, but the fact that there's just so many people self-employed in one form or fashion, right? Is that something that you guys see growing every year? And what do we, I feel like we learn new things about what clients are going through who do that every year. Yeah. What comes to mind when we think of that kind of side hustling or self-employed client trying to make it work?
Well, like the last 2 years with COVID, that's really increased. Yeah. But yeah, you see increase every year on Schedule Cs.
So just more of them overall, right?
Yeah.
COVID scenario how did that affect them?
It affected some of them, and some of them, their business grew.
Actually.
Right, so so it's almost like opening up that conversation is again, a great bonding point, because you're not assuming that their business tanked. Because of it, some businesses grew.
Yeah.
How did that go? What were the changes that you made? Addressing that person really as a self-employed person and talking to them, not just about how to fill out your tax forms, but like, how is this going for you?
Yeah.
What were the changes for this? Right?
Because a lot of people, they didn't work from home, so, and then they're not working from home, so they're able to do
They have
more contract work, and
Right.
and they realize that they didn't know they could have done it before. So.
Yeah, so maybe put more focus on it.
Mm-hmm.
You know, there, you could have, in LA, right, you could have, by not commuting, you could pick up 2-3 hours a day just from not doing that.
Yeah.
So if you multiply that by whatever you're making,
Mm-hmm.
Yeah.
just that could be growing your business, right?
Yeah.
It could have totally changed their entire profession. They could have been doing this business then, or they picked up this and this started picking up while this was declining, right? So just a lot of changing and getting on that level with a client. And as people that we generally work off commission or net income, you know, depending where you are in the business, but there's kind of a similar element in the same way, right? Of like, you can understand client and customer acquisition, client and customer retention. We mentioned things like having loyal clients, having niche clients that you're substantially better than your competitors at serving that client. Those are the same things that self-employed people have to think about, that W-2 people don't have to. So if you start talking to me in that way and I'm self-employed, that increases hugely the relationship factor. Because if I'm just going and sitting somewhere and I'm like, here's my paperwork, right? And the person's really not getting, they're not really looking at my overall situation. Like, I could be in a declining business that like, I'm concerned that I'm not gonna be able to pay my rent next month. Or I could be like, you know what, should I still go to this tax pro because my business is really growing right now? So maybe I'm gonna outgrow this person and I should go to my friend's person. Getting on and addressing, like in marketing, they talk about participating in the conversation in your customer's head. So whatever is going on with them, and self-employed people, we got a lot of things going on in your head, right? And going outside of that box of just being a tax preparer into somebody that's really walking along with that self-employed person, hugely raising the value.
Yeah.
You know, and hugely raising your own earning potential. Because these kind of clients, they refer their same type of business, right? So if this person's a driver, right, and you do a great job, you do a great job with relationship, ROI, and risk, right? And sometimes ROI and risk can be inversely related, right? They could be opposite. Like, you could save more on taxes, but it's not worth the risk because it's questionable.
Yeah.
And vice versa, right? So you do a great job of navigating that for this type of client, and your service is noticeably better in those three ways: relationship, ROI, and risk. They're going to refer actively because other people that are self-employed are constantly having unpleasant experiences with taxes. Right? There's not a lot of good news a lot of times that's going around, right? So even less bad is good.
And I think that it's like, some people get told it's a bad, but when they come to us, you explain the situation and they're just like, oh, the other person didn't explain it, so they're thinking it's a bad situation. You know, especially when you owe taxes.
Okay, right. They're thinking that shouldn't be the case, like something went wrong.
And then when you explain why, where it's going and why, then they're just like, oh, thank you for explaining that. Like, now I understand. Now I'm okay with paying $2,000, $3,000 in taxes.
It's not just telling you the balance.
Yeah.
So maybe that might be something like people that have not reported net income for many years in self-employment, not having like Social Security pension. Is that like an example of that? That like, hey, the part of this self-employment tax is going towards your to your Social Security and Medicare tax.
Yeah.
Yeah, I've had clients that have been doing taxes for like 10 years with someone, never explained to them why they always owed. And then they meet someone, like a friend, and their friend says, oh, I go to this person, and they explain everything to you. And, you know, whatever it is, so when they come, they're just like, you know, I've been owing taxes, and I've been told that I don't have to owe, and I've been owing for 10 years. And then we'll bring in your returns, and we'll take a look at it. When you look at it, then you explain why, and then they're just like, they feel more at ease.
Okay. And so really there's, when we're looking at the supply of expert providers, especially as the tax and accounting profession is a graying profession, as you can see by these gray hairs, but and it gives you more new gray hairs every day, except for Glenn, he's looking good. He's looking sharp. There's the expert level people are getting into retirement, it's overall, there's not a great supply of younger CPAs, younger tax experts. I think that's actually one thing that's made our team stand out, is you guys are all young, and that stands out when there's not as many, right? So it gives you really good perspective, right? But we've got to add the expertise of somebody more experienced, right? And we've got to really make sure we can meet both sides of that. So when you think of somebody or a couple in this example case that has multiple Schedule Cs, from a technical point of view, when you look at, like, let's look at the driver Schedule C first, Kyle. So total gross income, what are you thinking about when you see that it's 29,000?
Well, one, I can see that he's a driver.
Yeah.
So obviously he has a car.
Probably a safe bet.
No, he does a bicycle.
What type of driver is he?
Okay.
Yeah.
Yeah, and like,
I'm thinking just like Uber or Lyft is probably what he's doing, looking at this.
Do you
Yeah.
guys see cabbies a lot in your office? No? I haven't.
And I don't know if they get paid on a W-2 or 1099 cab.
They own the cab, right?
a lot of them are, owning their own cab, but we wouldn't really see that much. So Uber and or Lyft, so you might have like a point of rapport with that. For example, if you use Uber or Lyft, and some people like Uber better, some people like Lyft better,
I
getting
feel
a
like-
person talking.
I feel like a lot of those people that come in with Uber or Lyft, the minute you tell them like, oh, I'm like super familiar with this here, like I already know what to ask for, I already know what I need.
The forms you need.
Yeah.
Sometimes
Like
they just,
the information that's provided by the application itself.
yeah, because sometimes they'll just bring you the 1099, and it's like, oh no, sometimes they're like Uber, Lyft or Uber, they give you like some expenses already that they take out.
Yeah, so there may be a different report,
Yeah.
right? Yeah, so even just understanding that, hey, did they give you that
Mm-hmm.
already relationship, right? I can tell
Or do
that
you
you
have
work
that,
with a lot of
yeah.
people like this, right? So that makes me feel like good about what's going on right now. I think of when I see this income too with 3 kids, and in this example, I think that's how that this comes into play, is that because of the earned income credit potential, like this, you can see this return doesn't have, or this Schedule C, it's not filled up with expenses, right?
Mhm.
Like the other expenses are 1,900, and if we look at the page 2, like it's just some phone, some uniforms, some work clothes. So it's not like loaded up with expenses, right?
Right.
It usually isn't for this type of return.
Okay, so this might be fewer deductions, but trying to optimize the earned income credit.
Well, the vehicle being the largest
Right.
deduction. I mean, that looks right.
Meaning in the sense that if you are working through getting more and more deductions like you might normally be doing with a Schedule C, right? You could be decreasing the refund amount
Right.
Right.
because of the 3 kids, all under 17, right?
Yeah.
So I think clients don't want us to decrease the refund amount, is that right?
Yeah, that's so.
Some people
Well,
don't
but
understand
I think- but
like
I
all
don't-
that. They want to put zero. They're like, I don't want to have show income. I'm like, what? They want to be like I'm like, oh, I have all these deductions. Well, you can't take them anyways, but it's like, oh, I'm trying to get it down there because they don't understand taxes. They're trying to get it $5,000.
Stupid.
No, but I feel like also I feel like some people like this also that might not care much about the refund. It'll be because they're getting Medi-Cal or they're getting other
Mhm.
benefits
Mhm.
that they cannot show a large amount on the tax return.
Right. So that was going to be one of the main things that I think is, with Schedule C clients or business clients in general, is that it's not just about the tax return. There's other things that are involved, right? There's
Right.
health insurance, there's like government benefits, different income-based things. How is this going to look to this? And does this match up with what you've reported on your mortgage application? All those kind of things, right? So really understanding what else the person has going on.
Mhm.
And a lot of times they know it and they might like bring it up since it's an issue, but a lot of times they don't bring it up.
Right.
Right? So getting an overall picture of what's going on is super important. On the spouse's business, right? It's 14,000.
What does she do?
It looks like consultant, like some kind of I think I just made up a educational consultant. Is that a thing?
Yeah,
Yeah, it is.
works at Pronto.
It looks like it's paying around $1,200 a month, at least in this scenario. And there's expenses here, $3,700. Okay, so not a whole lot. Professional development, so probably some school going on, right?
Mhm.
And maybe the business is just starting up. Because the income is kind of not
Not
fully fired up, you could say. So what would you, if you feel like somebody just started a business, what would you bring up to, again, with the goal of increasing the relationship, ROI, and risk value? Like what type of questions or topics would you talk about with a newer business?
Startup expenses.
So maybe they had expenses before this year.
Right, before they open the
Right.
doors.
I would say just giving them a list of expenses, because a lot of these new business owners,
Mhm.
they're not even familiar with what they
Right.
can or cannot deduct.
So a list of expenses, right?
Yeah, having that conversation of like, because some people think like, I mean, you'd be surprised, but like somebody wants to do their home office and they'll say, oh, but I also use my kitchen and my bathroom. Where else am I gonna wash my hands and use the restroom? Or I'm like, so having those conversations and seeing how we determine home office space, how we determine mileage, what's better, taking the mileage or actual expenses. So just having those types of conversations.
So some kind of setup items that are going to be maybe hopefully consistent from year to year.
Right.
So you're trying to kind of establish that now. That's how we're
Educating
going to.
them, I guess, is
Also
the main
maybe
thing.
letting them know like it'll be easier for you for your taxes if you just open a credit card and just use it for business. So it could be easier to track your expenses and stuff.
Right. So identifying how are you keeping a record of income and expenses,
Mhm.
and then maybe a new business is going to be. Well, it's funny you mentioned that because I don't have any idea how to do that.
Yeah,
Right.
it makes it
Yeah.
your personal, that's not gonna.
Keep a log for your auto expenses, your auto mileage.
Yeah. So one of the things that when we were heading into this, the training extravaganza that Ingrid mentioned that I thought was really, I know I appreciated this having when you're doing a high volume of returns, as for our office to have a little more templates and things that like we know that these things are going to come up, and so like it's just making it easy for us to respond to those kind of things. So we do have like kind of one paragraph little write-ups that that I know I shared with you guys in the past, but maybe we can kind of revisit about things like, so home office expenses, vehicle expenses, and having separate Because a lot of times the self-employed person is not ready, they're not going to really set up a full accounting system. Right? You might say that is ideally what's going to happen, but they're kind of like going to have some kind of jerry-rigged scenario with a spreadsheet or whatever it is, right? And it's going to be, that's where they're at now, and like what they really need to focus on is like getting customers. Because 35% of businesses don't get a single customer. So a lot of tax pros get, and I think it's like 80% of businesses go out, don't quote me on this, but go out of business within 5 years. So pardon me if I'm the client and I just started a new business, that I'm not going to prioritize all of your egg-headed, like tax things.
I don't have time for that right now.
I just, yeah, and you actually want to see that in the client, because that's entrepreneurial drive, is we talk about prioritization,
Yeah.
right? That's great. What I'm really going to be doing when I walk out of this door is I'm going to be going to this networking event and meeting people and seeing if people need what I have. I'm going to be studying like how other businesses are pricing their services, so that I can raise my per customer value and my ticket like of the customer, right? So what are other drivers doing that's getting them more tips? If you're an educational consultant, what is your niche? Maybe you're working with people that are trying to get into colleges. Maybe it's even more niche, they're trying to get into Ivy League colleges. Those are the kinds of things you actually have to be thinking about. So we need to engage with these clients on a level of giving them things that they can actually do, right? And just having do you have a separate business bank account and a separate business credit card? Run all your income and expenses through those, right? So, if get QuickBooks, like we would recommend you get QuickBooks, right? Learn how to reconcile your accounts. That would be great. But also understanding that this is something that you can just do now, right? And it's not hard, and anybody can do it, and it's basically going to cover you, right? Until you're really getting it going. So with that in mind, one thing with this client would be, let's say they have a business credit card and business bank account. Is that going to catch all their business expenses?
No, because they're gonna buy donuts, use their business card, or go get a drink, use their business card, even if it's not for a non-business.
So there may be some excluding of expenses,
Right.
because it's actually a personal expense,
Yeah.
right? But then there also might be some missing
Cash.
expenses.
Or
Vice
some
versa,
cash
yeah.
that are paying cash, or
Yeah,
they got paid in cash or something that they didn't probably.
Missing income,
Yeah.
right? So missing income. What's more concerning about a Schedule C client's unreported income or expenses that aren't backed up with every receipt?
Underreporting.
Yeah.
Underreporting income, right? So that's where it's like a criminal item, then it's much more, so that,
Key letter.
yeah, it's potentially huge issues, right?
Yeah.
And so, but also the expenses, like what about the expenses that I'm gonna pay with my personal account, such as my rent, but I might have a home office.
Right.
That's when we sit down together and we calculate those percentages.
Right.
Because obviously your rent is not 100% business. So you're just gonna continue to pay your rent from your personal account, not your business account.
Yep. So, and similar, right, with, let's say, your vehicle payment.
Yes.
A new business owner or somebody that's a side business kind of person would be, do I need to move my car and have like does a corporation need to own it for me to write it off? All those kind of questions, right? So we're gonna arrive at a business use percentage based on how much you're using it. How are you tracking your miles? You might mention the report thing if it's a driver, right? So those are things that are always gonna come up, or frequently come up, I should say, where we want to engage in those conversations at a way better way than our competitors. Because this client group is rapidly growing, and they are, I would say, frequently evaluating their options, let's say,
Yeah.
right?
Yeah.
because it's, a lot of times it's bad news for them, they're owing, so like, I like that person, but then when it got to the end,
I think that's why that's the importance of being so thorough with this type of client.
right, and making them understand that it's, you're being thorough,
Right.
right? What else for this kind of client would be, so multiple Schedule Cs. Let's touch for just a moment on, or actually anything else that jumps out at you guys for this kind of client and having, you know, great technical success and client success with this kind of client?
Well, like if it's a new client, like Cynthia says, asking for the return to see if husband has been filing Schedule C before, maybe if there's any depreciations that need to be carried over.
Right.
Or anything that will need to be carried over or added to the Schedule C.
Yeah, picking up, okay. And that's a great segue into, this is something that was an added level of complexity that the Tax Cuts and Jobs Act added for us, right, is with multiple Schedule Cs, the QBI deduction, right, the Qualified Business Income Deduction. If we look at Form 8995, so that's where it's computing that deduction, right? And that's a really valuable, you know, we love that deduction. But there's, if you look at line 3, there's a carry forward. So if you had a loss from the previous year, it can drop your qualified business income, right?
Mm-hmm.
So a lot of times if it's a startup or a business that has been writing off a lot of expenses, not doing that much business, or some combination of that, they may have a loss that's coming forward. So that would show up then on line 3, right, as a negative, and would reduce their qualified business income and their qualified business income deduction. You can see also that the businesses are being netted out against each other, right?
Correct.
So on a married filing joint return, they're going together. And then you can also see that in a lot of cases for clients that are not higher income, right? The QBI deduction is 20% of the net business income or the taxable income. They just had some stats come out for tax year 2020 where 75% of people were at 0 federal income tax.
Wow.
After all the credits and after there was all that new kind of stuff and a lot of declining income, you know, for COVID, right? So, and you can see here that this qualified business income, even though there is net income, right, of like 24,000, it's actually at 0 because there's no taxable income.
Mm-hmm.
And we see that where it with a lower or middle income client, you're expecting to see 20% for the QBI deduction, but it's a lesser amount or it's at 0. So being able to read this 8995 with confidence when there's multiple Schedule Cs, I think is another little area of technical excellence that makes you stand out from the crowd. Thank you, guys.